Hi there. As of now, Algorand has been down by almost 3% so far this week. It has been a very crazy week, so let's look at it through the Wyckoff lens and see what the whales are actually doing. If you're new to my session, I'll cover the Wyckoff stage, the trend change potential, as well as key price levels. These are education content, not financial advice. If we look at the weekly chart of Algorand, we see that earlier this week, it has tested a level below the red key level of 0.087. So what is this red key level? This is a level set by the low of 2023 accumulation cycle. So this has been tested 3 times back then in that particular year. This week, that level was broken. So the implication is that the worst may return, because a lot of times the whales are going to test multiple times before they allow the price to go up like back in 2023. So there is a risk that they'll do the same trick multiple times in the coming weeks just to confirm that the paper hands are totally gone. All right. So we're going through a period that in the case of Algorand or in many other altcoins, haven't gone through in their lifetime, since they were born, as early as pre-2020. So the big picture is still more or less the same, that the paper hands diamond hands test is still going on, and all-time low is being set across the board for quite a number of altcoin projects. What we need is what we call a sign of strength, meaning price advance with volume. What does it look like? Something like this. Okay, it can be a massive candle and going to challenge the trading range top set by what we call the automatic rally, the AR. So basically, you can consider that as the whales set a trading range top for the accumulation cycle. But when the narrative is positive and people are willing to get in, or FOMO in even, like this case, it can definitely challenge that level and beyond. Okay, it was 3 key levels above the blue key level where the automatic rally challenged. But then subsequently, the whales brought it back to, underground basically. All right, so we want to see something like that again, either massive candles going up with significantly higher volume than average, or multiple medium-sized candles and a series of white volume bars like this case. Okay, it doesn't have to be massive few. There is another option, the multiple consecutive smaller candlesticks and lower volume bars. And of course, that takes longer, this takes quicker, just that major difference. So it can happen in 2 different ways, 2 different styles. Now, let's get to the daily chart. Last week, or even the week before, we already talked about that the price has gone to the stronger side of the channel, the downward channel, which is a good sign within the downtrend. But the thing is, like I said, this point 0.087 was tested yesterday. The lucky thing is that the bulls successfully brought the price back to above the orange key level of 0.095. So very strong support when the price gone below the 0.087, the low back in 2023, like I mentioned in the beginning. So let's hope the bulls are successful in capturing the support around that level and don't let it go below that red line again. But I said already, look at what happened over here. That was tested multiple rounds before the final surge happened. So it shouldn't surprise you if this kind of behavior happened in the next week or 2. The dates that we are looking at, if the bulls successfully gather sufficient support, is the very first one, right before Valentine's Day on the 13th, and then near the end of February. So these two occasions, these triangles points to those 2 dates. And the next one, if the price really comes back down to challenge the red key level, but manage to stay above it, will be near the end of the first week of March, the 7th of March. Okay? The reason I said it may come back down when you look at these volume bars. This one, on Thursday, the volume was gigantic. Look at the candlestick, much longer than what we had for the entire week. And the volume was crazy. Yesterday, yeah, the price went up, but it also has a wick on the top, a more significant wick on the top compared to Thursday. And the volume wasn't really that high. So even the bulls managed to push the price back to above the orange key level. It's still not as strong as the momentum that pushed the price to the red key level. All right, so that's why I interpret that is a sign that it's still not very solid, the upward momentum. So keep an eye on this. Remember the dates we talked about. Next week when we come back, we'll be able to see whether the bulls managed to get hold of the first opportunity and, give everybody a Valentine's Day present. By that time, confirming the downtrend is over. If you're interested to access these sessions 2 days earlier than the others, join the channel membership now. Here's another video you will be interested in. See you.